This is the one of me actually trading futures. What is up guys, Doka here. I have been trading Forex for a little bit now, and now I want to dip my toes into trading futures. Now I want to lay out all my plans in front of you, that way you can actually follow the journey from starting trading futures to getting consistent with trading futures. So here's the game plan. I only trade one instrument, one time frame, and one strategy. Now, why did I choose to trade one instrument, one time frame, and one strategy? It's just because that I'm already busy with doing more than 2 strategies on trading Forex, and I do have 10 strategies that I do trade in my intraday / swing trading portfolio in my Forex, and I did not want to add more than one instrument on top of that when I get into futures. I'm going to be trading the Nasdaq, and also I'm going to start with Micro Nasdaq 100, which is the MNQ instead of the NQ. Now, I've already gone through my backtesting with the strategy that I'm going to be trading, and I tested it on 2 time frames, and I have concluded to trading only 1 time frame. So the 2 time frames that I backtested were the 15 minutes and the 1 hour. I know some of you will say, well, why don't you go to the 5 minutes or the 1 minute? I did backtest the 15 and the 1 hour because of my trading style. I don't really care what you trade, and I don't really care what time frame you trade. The one thing that matters to me is the strategy that works for me and the time frame that works for me. Out of the 2 time frames that I tested, both of them are profitable, and I have tested them in a short window. I have my earliest time to enter a trade, and I have my latest time to enter a trade. My earliest time to enter a trade is 5 in the morning, and the latest to enter a trade is 12 p.m. The last signal that I would be interested of getting into is the 11 a.m. signal time. So I'm talking about the 1 hourly time frame. Now, what I'll do, I'll get to the chart and show you a little preview of the strategy type that I'm going to be trading. It's super simple, and if you do follow along, you will also understand why you need to keep your things simple. As you can see here, I have MNQ chart open right in front of me, and I have it on the 1 hourly time frame. So for the strategy that I'm going to be trading, it is a pullback strategy. So now let's say you have a bullish trend that's making higher high and higher lows, right? I'm looking to get somewhere here or somewhere here. So that's the bottom end of the pullback as the market is making a new high or a new phase 1. Then while the market is making the phase 1, I can get into a setup that is down here or up here. That's just for theory. Now let's get into the chart, and I'll show you exactly what I am looking for. So we have a bullish trend here. So the market is making higher high and higher lows. So we've got this here, new highs and new lows. I'm just looking for a pin bar to get in, and the pin bar must at least touches the 8 EMA that I have up here, and then the rest of the indicators must be in their proper place. As you can see here, I already had a new high here. Okay, higher high, higher close. Then I need to wait for a pullback, and then when I get the pullback, and I need to look for a pin bar that meets my criteria. So once I get that validation or the pin bar or the signal candle, then I place a buy stop order above it. Then I place my target somewhere down there, and I look for a 2-to-1. Let's say if I start with 2 micro or 4 micros, I will place my ultimate target at the 2-to-1, and then I look for a 1-to-1 risk reward ratio. Then I take out my first target here. Once my first target is reached, now let's say this was my stop loss down here. Then all I have to do, once my target 1 is hit, then I bring my stop loss above my entry by a few pips. That way I am left with target 2 to get hit as a pain-free trade or a risk-free trade. Now I'm going to show you my backtesting sheet so you have a better perspective of that strategy. Here is my backtested sheet where you can see all of the data points that I was looking at. So besides the trade data, order info, exit info, what I was also looking for was in my additional informations, I was looking for my maximum favorable excursion, and in that chart note that you see here, I was looking for how many times that the market hit a 1.5 to 1. So there you can see all of these chart notes where it says hit 1.5. As you can see here, if I was to show you this here, I have 100 trades, right? If I was to track this, what you will see is that 56 trades did hit 1.5 before it reached the 2 to 1 or before it goes back for break even. So what I want you to understand is that while I was going through my back testing, I was not only looking for my strike rate. As you can see here, win-loss percentage, it's at 77%, which is very, very, very profitable with the way that I back tested it, because I was looking for target 1 and target 2s, and I was also tracking the maximum favorable excursion. So I started calculating the maximum favorable excursion after the trade has reached the 2 to 1. If I were to grab all this and count how many times that I had a maximum favorable excursion, now you will see it's 29. So out of the 77 trades of that 100 trades that actually hit take profit, 56 of them actually hit 1.5 and 29 of them actually goes beyond the 2 to 1. Now let's say if I was to like trail stop behind my profit target after the market always hit 2 to 1, then more often than not, I would get a 3 or multiple in my trailing style. And one thing that I must mention, in the currency pair, my backtesting sheet is set up for forex pairs, and I tweaked this a little bit. I just put one currency pair in the forex market and then put my price for the Nasdaq. And I already know what I'm looking for. And all you can do here, if you're tracking this, you can just ignore the Euro USD because the price is Nasdaq 100 futures price. Max consecutive trade loss, you see it's 6. So basically, if I have more than 6 trades that lose in a row, that means I need to go back to my backtested sheet to see what I have been doing wrong. I chose to go the prop firm route with the futures. For the first 30 days of me trading the futures, I will trade it on prop firm. So why did I decide to trade futures on prop firm? It's because that I know I can get that experience on cheap. And I do choose to trade with funded nicks. I did choose funded nicks because they do not have a subscription model where you have to pay a monthly fee until you pass the challenge. And the fees are not that high as compared to the other prop firms out there in the future space. I will be trading one instrument, which is Nasdaq, and I will be trading one time frame, which is the hourly time frame, and I will be trading one strategy, which is a very stupidly simple one paintball strategy on a pullback setup. And this is how I plan out to trade futures. And later on, when I get my confidence on that strategy trading on a prop firm challenge, then I will be switching to risking my own capital. Thank you for watching, and I will see you guys in the next video where I will give you an update on how my first week went.